This is not financial advice. I'm recording my thoughts about JD.com. JD.com is a retail and supply chain company that competes with Alibaba in China. In this video, I'll cover JD's business model briefly because I don't want to make this video too long. Then I will cover its financials and I will do the valuation. Let's get started with the business model. JD has broadly 4 revenue segments. The first one is JD Retail. The second one is JD Logistics. Third one is Data. And fourth one is New Businesses. JD Retail, including JD Health and JD Industrials, mainly engage in online retail, online marketplace, and marketing services in China. The second segment, JD Logistics, includes both internal and external logistics businesses, so it's a promising and upcoming business for JD. Data is a local on-demand delivery and retail platform in China. And the fourth segment, New Businesses, mainly include JD Property, Jingxi, and overseas businesses. Out of these 4 revenue segments of JD, JD Logistics is the most promising revenue segment at the moment. As you can see on the screen, they have nationwide warehouse network and last mile reach. They are doing rapid expansion and they have best-in-class fulfillment capabilities. They have over 1,500 warehouses across China. Their gross floor area is about 31 million square meters plus. They have more than 300,000 delivery personnel, and with respect to geographic coverage, they cover almost all counties and districts in China. Let's move on to the financials. At $36 stock price, the market cap is about $56 billion. The revenue for the past 12 months is about $150 billion. So that's a price to sales of about 0.33. But this is an e-commerce company, so we cannot take price to sales too seriously. The net income is about $2.86 billion, which is impressive. The earnings per share is about $1.78, and out of this $1.78, they're paying a dividend of $0.62. So there's a huge gap between the EPS and the dividend. So we can say that this dividend is safe. Current PE ratio is about 21 and the forward PE is close to 20. Let's now look at what's happening with the revenue. Since 27, that means for the past 5 years, the revenue has been growing at a compounded annual growth rate of about 24%, which is really impressive. But as we all know, this company is getting bigger and bigger and it's getting harder and harder for it to grow. For example, I have shown on the screen from 2021 to 2022, they could only grow their revenue by about 10%. And in the most recent quarter, their net revenues are only up by about 1%. So that's a huge deceleration in 2023 Q1. But there is still 3 more quarters coming up. So we have to see what will happen to the overall revenue growth year over year between 2022 and 2023. Please note that the currency used in this chart is billions of RMB. 1 USD is about 7.14 RMB. So when you see a number here, you have to divide it with about 7 to get the number in USD. For example, in the most recent quarter, they made about 243 billion RMB. You have to convert it into US dollars. For that, you have to divide it with 7, which will result in about 34 billion USD revenue. So the most recent quarter revenue is about 243 billion RMB. So what's going on with the individual revenue segments? As you can see on the screen, JD Retail made about 212 billion RMB. That is down about 2% year over year. So the retail business is pretty much flat. JD Logistics, it went from 27.4 billion RMB to about 36.7 billion RMB. So that's a growth rate of about 34%. Even though we see flat growth in JD Retail, JD Logistics is growing at about 34% in the most recent quarter. So that is good news. Let's look at Data and New Businesses. They are barely making any revenue. So for this valuation, I'm going to just ignore them and take JD as 2 segments only, JD Retail and JD Logistics. And we'll see how that will play out in the valuation. Now let's look at JD's profitability metric, for example, the operating income. As you can see on the screen, we see the operating income percentage for the past 6 quarters. It's ranging between 2.1% to about 5.2%. In the most recent quarter, they could achieve 4.6% of operating margins. And if you notice, that's an improvement from 2022 Q4. So that's good news. JD is investing in its businesses, and therefore we can see some capital expenditure here. For the trailing 12 months, the capital expenditure is about 21 billion RMB. In other words, 3 billion USD. That's not too significant. Let's now look at JD's balance sheet. As you can see on the screen, they have $30 billion of cash, cash equivalents, and restricted cash and short-term investments. That is very, very impressive because this company's market cap is $54 billion, and out of that, they have $30 billion of cash. It seems like a wow number, right? But not so fast, because if I just move on to the next slide to show the liabilities, their short-term liabilities are close to $33 billion. For example, their short-term debt, accounts payable are like the money that they owe right now, right? So even though they have $30 billion of cash, as you can see on the screen, they currently owe 17 billion immediately. So we cannot give full credit to their cash yet. So the point here is, even though they have $30 billion of cash, they have $23 billion that they immediately owe. So that takes the excitement wow factor away from this balance sheet. But to clearly account for the cash that they have, what I have done is I have taken the total current assets of about $44 billion, and I have deducted the total current liabilities of $32 billion. So that gives us a delta of $12 billion. So if you ask me how much cash does JD have, I would say 12 billion instead of 30 billion, because 12 billion is a better indicator of what they have currently. Now let's look at the number of outstanding shares. As you can see on the screen, they have 3.13 billion outstanding shares. But the stock price that I have shown, $36, is for American Depository Receipt. That's an ADR. The ADR ratio is 2. In other words, if you have 2 shares outside of the US, that is equivalent to 1 share within the US. So the number of ADRs is 1.6 billion. So if you buy this share at about $36, you have to account for the total ADRs as $1.6 billion. Let's see if there is any stock repurchase program. JD does have some stock repurchase program, but they could only buy about 3.8 million of these American Depository shares with about 0.2 billion US dollars. So that's negligible. So let's just assume that JD is not interested in buying back shares. Now let's get to valuation. Usually I give 2 cases, one with reasonable assumptions and one with great execution. But in the interest of time, I'm only going to give the case with reasonable assumptions, otherwise known as base case. As I said before, JD has 4 revenue segments, but only 2 of them contribute to majority of their revenue, JD Retail and JD Logistics. So I'm going to ignore the rest of the 2 segments, data and new businesses, from this valuation. Retail is growing at a flat rate, and even if it grows in future, it's going to be low single digits. But the logistics business in the most recent quarter grew about 34%, and it's not stopping. The CAGR for the past 5 years is about 43%. So I have to keep them separate, and retail business is very different from logistics business. So I have to value them separately. So that's why let me get started with the retail valuation. In 2022, JD Retail earned about 865 billion RMB. I have to convert that into US dollars, so I divided this figure with 7.14 and I got $121 billion. With respect to estimated growth rate for the retail business, I'm assuming 5% year over year because China's economy is going to grow at about 5% year over year. Last year, they grew their revenue by about 10%, remember? But in the most recent quarter, the revenue growth was pretty much flat. But we have 3 more quarters, right? So maybe they will get to high single digits, but we don't know. But in my opinion, China has to have a rebound in future. So 5% year over year growth, in my opinion, for the retail business is reasonable. So that's why I'm assuming 5% year over year growth. With that, they can make about $154 billion of revenue in 2027. In the most recent quarter, the operating margins are close to 4.6%. So the net profit margin would be about 3%, but as the scale bigger and bigger, I'm assuming that JD Retail will build some efficiencies, cut some costs, and get us 5% net profit margin. 5% net profit margin for retail business is not too hard. If you're looking for double digits, yes, that is very hard. For example, Amazon's retail business in the US has close to 7 or 8% profit margin. So 5% is achievable with JD. So that's why I'm assuming 5%. With that, they will make about $7.7 billion of net income in 2027. Since this business is already really big and generating constant net income, I'm going to give it a cash cow multiple of 15. Remember, currently its PE is about 20, right? So people are paying a 20 multiple, but I'm only going to pay 15 multiple for this business, which I call as a cash cow multiple, which is given to companies which have very high revenue and growing slowly, but have guaranteed cash flow. So with 15 multiple, the market cap in 2027 would be about $116 billion. Since we are dealing with ADRs, the number of shares currently are about $1.6 billion, and I'm assuming that there will be no buybacks. So, and there is no dilution as well. Currently they have close to $30 billion of cash, out of which I'm giving them credit for 12 billion. So that's still significant amount. Their capital expenditures are close to 3 billion in the past 12 months. So I don't see a reason for them to dilute the shareholders at all. If at all, they could buy back, but I'm just keeping it neutral. So number of shares are about $1.6 billion. So when I divide the $116 billion of market cap with 1.6 billion outstanding shares, I get a stock price of $72 for JD Retail. Okay, now let's move on to JD Logistics. As you can see on the screen, in 2022, close to 181 billion RMB was made by the logistics business. I divide that with 7.14 to convert into the dollars. So that's about $25 billion of revenue in 2022 for the JD Logistics business. We do know its CAGR was about 45% for the past 5 years. In the most recent quarter, it was about 34%. The business is still small. So I'm only assuming 22.5% year-over-year growth for the next 5 years, which I think is reasonable. With that, they can make close to $70 billion of revenue in 2027. Logistics business can actually get a better profit margin than 5%. For example, UPS in the most recent year made about 11%. I'm not comparing UPS with JD, but the logistics business is slightly better than the retail business. So that's my opinion at least. But still, I'm giving it a 5% net profit margin. If I were to choose, I can easily assign 7 or 8%, but I want to keep this reasonable. So that's why I'm assuming 5% net profit margin. With that, they can make about $3.5 billion of net income in 2027 for JD Logistics. For a company with growth rate of 22.5% and has a net profit margin of 5%, I can assume a multiple of about 13 to 14, but I'm assuming a multiple of 15, which I think is reasonable. With that, the market cap in 2027 would be about $52 billion. The number of outstanding shares with respect to ADRs is about $1.6 billion. So when I divide 52 billion market cap with 1.6 billion outstanding shares, I get a share price of about $33 for logistics. Remember, retail was $72 and logistics is worth $33. Wait, there are two more components. JD does have some cash equivalents, right? So that cash and cash equivalents is actually owned by us shareholders. I could have put $30 billion cash equivalents and short-term investments, but I have explained why I am choosing 12 billion instead of 30 billion. So I'm only going to assume that they have $12 billion of cash equivalents and short-term investments. This 12 billion, I'm going to divide it with 1.6 billion outstanding shares. So I get $8 per share. So if I own one share, I own $8 of that cash because the whole cash is going to be owned by the individual shareholders. So that's the reason why I have $8 contributed by the cash equivalents that currently JD have. So now $72 for retail, $33 for logistics, and $8 for the cash. There's one last item. That's dividend accumulation. JD is paying about 62 cents dividend per share per year. If you wait for the 5 years, that's going to contribute to about $3 of dividend accumulation. 5 years multiplied to 0.62 US dollars. So that's going to be $3. Now we are done with the valuation. Let's put all these pieces together. JD retail is worth $72. Logistics $33. Cash equivalent short-term investments are worth $8. And the dividend accumulated by us is about $3 per share. So when I put all of these numbers together, I get $116 stock price in 2027 with reasonable assumptions. Currently the stock price is at $36, right? So from $36 to $116, that's more than triple, right? So that's 222% gain in 5 years if I buy the stock right now. And this is just the base case. I'm not going to show you the great execution case. Obviously it's going to be much higher, but we do have Chinese government risks. There are geopolitical risks and accounting risks. So for me to invest in a Chinese stock, I want to have a much higher reward because I'm taking more risk. So when I see 222% gain in the base case, that is good enough risk for me. That is the reason why I invest in JD.com as long as it stays below $40 because I'm looking at more than 200% gain or a 3x gain in the base case itself. So I currently have significant position in JD.com and I have no problem accumulating more shares as long as it stays below $40. Let me know your thoughts in the comments. Thank you so much for watching.